For months now, something has been bothering XRP holders. If you've been paying attention to the crypto market, you've probably asked the same question many others are asking right now. Why hasn't BlackRock made a move on XRP yet? Think about it. The world's largest asset manager stepped into crypto in a massive way with Bitcoin, then Ethereum. Both ETFs exploded in popularity and brought billions of dollars into the market almost overnight. So naturally, many investors assumed XRP would be next. But it hasn't happened, and the longer the silence continues, the more confusing it becomes. Because if BlackRock announced an XRP product tomorrow, it would instantly become one of the largest XRP markets in the world. It would validate the asset in the eyes of institutional investors and bring enormous attention to the entire ecosystem, yet they still haven't done it. Which raises a very interesting possibility. What if the real plan isn't launching an XRP ETF at all? What if something much bigger is quietly unfolding behind the scenes? Because recently, some statements coming from BlackRock leadership suggest that the company may be preparing for something far more transformative than simply listing another crypto fund. And if that theory turns out to be correct, XRP could end up playing a much larger role in the future of finance than most people currently realize. But to understand why, we need to start with something Larry Fink has been talking about for years: tokenization. Larry Fink, the CEO of BlackRock, has repeatedly described tokenization as the future of financial markets. Not just crypto, not just digital assets, the entire financial system. Tokenization is the process of putting real-world assets onto blockchain networks so they can be traded, transferred, and settled digitally. Instead of relying on slow clearing systems and layers of intermediaries, assets can move instantly across global networks. That includes things like stocks, bonds, commodities, and even real estate. In other words, instead of waiting days for transactions to settle, everything could happen almost instantly. And for institutions managing trillions of dollars, that kind of efficiency is extremely attractive. BlackRock currently manages an enormous amount of capital across its investment products. If even a portion of those assets were tokenized, it could fundamentally change how markets operate. Because suddenly, trillions of dollars in value would exist directly on blockchain infrastructure. And when that much capital moves into a new system, the technology supporting that system becomes incredibly important. Which brings us to something interesting. Some analysts believe that instead of focusing on launching a simple XRP ETF, BlackRock may be paying attention to the infrastructure layer that could support tokenized financial markets. And this is where XRP begins to appear in the conversation. The XRP ledger was originally designed to solve a very specific problem in global finance: liquidity. Moving money between countries, banks, and financial institutions has always been slow and expensive. Traditional systems rely on outdated infrastructure that can take days to process transactions. Ripple's technology was built to change that. The XRP ledger allows transactions to settle in seconds, while providing a bridge between different currencies and financial networks. That bridge functionality is extremely important, because if tokenized assets begin moving across blockchain networks, there still needs to be a way to connect different markets together. Different currencies, different blockchains, different financial systems, and that's exactly the type of role XRP was designed to play. Instead of replacing existing financial systems, it can act as the connective layer between them. This is one reason why Ripple has spent years building partnerships with banks, payment providers, and financial institutions around the world. But speculation alone isn't what makes this interesting. What really matters is the fact that real-world experiments are already happening. One of the most fascinating developments has taken place in Hong Kong. Financial regulators there launched a series of blockchain pilot programs focused on tokenizing real-world assets. These pilots brought together banks, financial institutions, and blockchain companies to test how tokenized financial products could work in a regulated environment. Ripple participated in these initiatives alongside major banks and infrastructure providers. The goal was to explore how blockchain technology could handle things like asset transfers, settlement systems, and cross-border financial flows. One project focused on tokenizing real estate assets and facilitating transactions across financial networks. These tests demonstrated something extremely important. Tokenization is no longer theoretical, it's being actively explored by some of the largest financial institutions in the world, and once experiments like this prove successful, adoption tends to accelerate quickly. Because no major financial firm wants to be the last one to adopt a technology that improves efficiency and reduces costs, which leads to what some analysts call the institutional domino effect. If a company like BlackRock begins tokenizing assets on a large scale, competitors will almost certainly follow. Asset managers like Fidelity, Vanguard, and State Street collectively manage tens of trillions of dollars. If tokenized markets offer faster settlement, reduced operational costs, and global liquidity, these institutions won't ignore it. They will compete. And competition in financial markets tends to move very quickly once momentum builds. Imagine a world where stocks, bonds, and commodities exist directly on blockchain networks, where settlement takes seconds instead of days, where assets can move across global markets instantly. That kind of system would require powerful infrastructure capable of handling enormous amounts of liquidity. Which brings us back to XRP. Because while stablecoins are becoming increasingly popular, they don't solve every problem. Stablecoins move money efficiently within a single system. But connecting multiple systems together requires something else entirely, and that's where XRP's design becomes extremely relevant. XRP was built to act as a bridge asset between different currencies and networks. Instead of needing direct trading pairs between every currency in the world, liquidity can flow through XRP as an intermediary. This dramatically simplifies cross-border transactions and reduces friction between markets. Ripple expanded on this idea through something called the Interledger Protocol. Think of it as an internet for money. Just like the internet allows information to move freely across networks, the Interledger Protocol allows value to move between different financial systems. That means money, tokens, and assets can transfer across multiple blockchains, banks, and payment networks without needing them to operate on the same platform. In a tokenized financial system, that type of interoperability becomes incredibly valuable. And while the average crypto investor often focuses on price movements, institutions tend to focus on infrastructure, which explains why Ripple has been quietly expanding its presence in institutional markets. Over the past few years, Ripple has been investing heavily in financial infrastructure. That includes partnerships with banks, payment providers, and companies building institutional-grade trading systems. The goal is to create an ecosystem where digital assets can operate with the same reliability and performance standards that Wall Street expects. Institutional investors require speed, transparency, and deep liquidity, and the crypto industry has been gradually evolving to meet those requirements. Projects are emerging that provide high-speed trade execution, improved settlement systems, and professional market infrastructure. All of this helps bridge the gap between traditional finance and digital assets. And when you combine these developments with global tokenization experiments and increasing regulatory clarity, a much larger picture begins to emerge. Which brings us back to the question that started this conversation. Why hasn't BlackRock launched an XRP ETF yet? There could be several reasons. One possibility is regulatory timing. Large institutions typically wait until regulatory frameworks are clearly defined before introducing new financial products. Another possibility is that infrastructure for tokenized assets is still developing. Launching a simple ETF might not be the priority if the long-term goal involves integrating blockchain technology into much larger financial systems. And there's also the possibility that institutional demand is still building. Financial markets often move slowly until multiple factors align at the same time. Regulation, technology, liquidity, market demand. When those elements finally come together, adoption can happen much faster than most people expect, which is why some analysts believe we may be approaching a turning point for blockchain-based finance. Across global markets, volatility and uncertainty have been increasing. Investors are looking for more efficient ways to move capital, manage liquidity, and access new financial opportunities. Blockchain technology offers solutions that traditional systems struggle to provide. Faster settlement, global accessibility, transparent transaction records, and new financial products built on programmable infrastructure. As these advantages become clearer, institutions are beginning to experiment more seriously with blockchain integration. And that's why developments surrounding tokenized assets, financial pilots, and infrastructure partnerships are so important, because they show that the financial world is gradually moving toward a new model, a model where traditional finance and blockchain technology operate together, not separately. And if that transition continues accelerating, assets like XRP could end up playing a critical role as connective infrastructure between these systems. When you step back and look at the bigger picture, the pattern becomes clearer. BlackRock discussing tokenization, financial institutions running blockchain pilot programs, Ripple expanding partnerships with banks and financial networks, infrastructure projects connecting traditional markets with digital assets. All of these developments point toward a single trend. The financial system is evolving, slowly at first, but potentially very quickly once adoption reaches a tipping point. And if that moment arrives, the technologies designed to move liquidity across networks could become incredibly important, which is why many investors are watching the XRP ecosystem so closely, because by the time the majority of the public realizes how much the financial system has changed, the infrastructure powering it may already be in place.